If you got student loans and you're dreaming of buying a home, you might feel a little bit stuck. Maybe you're asking yourself, do I need to pay off all of my student loans before I can ever think about buying a home? Let me take a moment to assure you. The answer is no. You don't have to delay your homeownership goals because of student debt. In fact, you might be closer to owning your dream home than you actually realize. Hi, my name is Kevin Martini, and this is episode 202 of the Martini Mortgage Podcast, and I'm calling it, Can You Get a Mortgage with Student Loans? Pretty original, don't you think? Seriously, stick around. I'm going to provide you with the clarity and confidence you need to take the next step towards homeownership without letting student loans hold you back. Now, before I get too deep into the water on whether or not you can get a mortgage with student loans, spoiler alert, you can, I have to make those legal folks happy. So, I'm Kevin Martini, a certified mortgage advisor and producing branch manager, NMLS 143962, with the Martini Mortgage Group at Gold Star Mortgage Financial Group Corporation, NMLS 3446, equal housing lender. This podcast is here to inform, educate, and entertain, not to provide legal or professional advice. Now, with that out of the way, let's start with a myth that I hear all the time. You can't qualify for a mortgage if you have student loans. This myth stops so many people from even trying, and it's simply not true. What matters isn't the fact that you have student loans. It's how you're managing them. The truth is, mortgage lenders look at your overall financial picture, not just your debts. They want to know, can you manage your monthly expenses, including your new mortgage payment? That's why this concept, like your debt to income ratio or DTI, plays such a big role in determining your eligibility for a home loan. Your DTI is one of those key numbers that lenders use to evaluate your ability to repay a loan. But don't worry, it's not as intimidating as it sounds. Here's how it works. Your DTI is a percentage of your monthly income that goes towards paying off your debts. This includes student loans, car loans, credit card payments, and of course, your future mortgage payment. Remember, as a certified mortgage advisor, I share this with first-time and repeat home buyers. It's all about your monthly payment, not your total debt. For illustration, if you earn $5,000 a month and your total debt payments are $1,500, your DTI is 30%. Most lenders are comfortable with a DTI up to 43%. Though some programs at the Martini Mortgage Group allow for an even higher DTI. The good news is student loans aren't automatically a deal breaker. Again, it's about the monthly payment of your student loans, not the amount you owe for student loans. And it's about balancing your income and your obligations. So let me share a Kevin Martini pro tip. If your student loan payments are in deferment or income-based repayment, as a Raleigh mortgage lender, we would use a percentage of your loan balance to estimate your monthly payment. And that number can be materially lower than you think. Now let's talk about the options. There are loan programs specifically designed to make homeownership accessible, even if you're carrying student loan debt. For example, FHA home loans. These are backed by the Federal Housing Administration and are great not just for first-time home buyers, but also for repeat home buyers. FHA loans typically have more flexibility in the credit arena and DTI requirements. This means you don't need perfect credit score, or a sky-high income to qualify. Or take the conventional loan. Thanks to recent updates, many conventional programs now are more lenient with student loan debt. Some even have first-time homebuyer perks like lower down payment requirements. And if you're a teacher or a healthcare worker, or if you serve in the military, there may be specialized programs available for you. Programs that recognize your unique contribution and work to help remove the financial barriers to homeownership. Here's the Kevin Martini bottom line. There are plenty of paths to homeownership, and student loans don't disqualify you from any of them. Here's where things get very exciting. One of the smartest steps you can take is to get pre-approved for a mortgage. Think of it as your golden ticket to understanding what is possible. A pre-approval from the Martini Mortgage Group gives you a clear picture of how much home you can afford and what your monthly payments will look like. It also signals to a seller that you're serious, since it shows that you're not just ready and willing. You're ready, you're willing, and you're able. Here's the best part. During the pre-approval process with the Martini Mortgage Group, you'll work with either myself or fellow Raleigh mortgage broker Logan Martini. We'll help you navigate any concerns about your student loans, analyze your financial situation, recommend the best loan programs for you, and even strategize on ways to improve your eligibility if it's needed. Does guessing what's possible? No. Get pre-approved and find out. Here's the truth. Student loans are a reality for millions of people. It's not about the debt itself. It's about how you're managing it. If you're making your payments on time and keeping your other finances in check, you're demonstrating financial responsibility. And that's all we can ask for. But let's talk about the elephant in the room. Many people fear that they'll never save enough for a down payment while paying off their student loans. Did you know you don't need a 20% down payment to buy a home and secure a mortgage with the Martini Mortgage Group? Many of our loan programs allows for a down payment as low as 3%, and some even offer a zero down option. Plus, there are down payment assistance programs that can help bridge the gap. Don't let misconceptions about the payments help you and hold you back. I and fellow mortgage broker Logan Martini have solutions designed to meet you where you are. Now, you might be wondering, should I wait until I pay off my student loans to buy a home? Here's something to consider. The real estate market isn't waiting for anybody. Especially, they're not waiting for you to pay off your student loans. Home values tend to increase over time, and so do rents. By waiting, you might actually be costing yourself more in the long run. When you own your home, you're building equity. And with every mortgage payment, that's money that goes back into your pocket, not your landlord's. And today, the barrier of entry is very achievable. That means you can start building that equity sooner than you think. All right, let's bring this all together and close this special episode. If you're carrying student loans debt and you've been hesitant about pursuing home ownership, here's the key takeaway. Your student loans don't define your ability to buy a home. What matters is having a strategy, and that's where myself and fellow mortgage broker Logan Martini can help. We can provide you with the crystal clear clarity on your options, and we can clear the path to turn your homeownership dreams into a reality. So what are you waiting for? Don't let student loans hold you back from the life you want. Thank you for tuning in to episode 202 of the Martini Mortgage Podcast called Can You Get a Mortgage with a Student Loan? If you found this helpful, don't forget to like, subscribe, and share this podcast episode with someone who needs to hear it. Remember, your dreams are closer than you think. Let's make it happen.